Hi, good afternoon. You're watching Halftime Report. It's 12 noon. We're halfway through the trading sessions. It's a perfect time to tell you of everything that has happened so far and all that is lined up for the rest of the trading day. I'm Samera Abdi and with me is Lata Venkatesh. Hi, Lata. Good afternoon. Not a good day of trade by any angle, but nevertheless, we have moved off of the low point of trade, but still sulking under pressure.
I would take the latter part of your sentence where you said that still it's seen some bit of buying at the lows, and it's seen a substantial amount of buying in certain counters. Yeah. You know, the mid-cap, for instance, was down, almost 3%, 2.6 at one point in time. So there is a 200-point gain in that index. The advanced declines were 11 in the red for one in the green. Now they are 7 in the red for one in the green. So it appears that maybe there was some huge fears of margins calls from brokers, and that's why traders sold in a hurry in the morning. And after the initial margin call fears ebbed, people have come and either there was short covering or there was actual bargain buying. We will have to see the second half of the day. The trading in the second half of the day will become very crucial. But for the moment, it does look like it's not that all hell has broken loose. But we will discover it through the course of this show itself when Europe will open, and we will get an idea as to how the second half will pan out. For the moment, the top headlines.
Yes, the market recovers from the morning savage cuts on the back of bargain buying. Trading sentiment, though, still remains somber. The mid-cap index sheds about 300 points. NBFCs punished in trade.
Power stocks somewhat enthused on hopes of a likely stimulus for this sector. Sources tell CNBC TV18 that the government is expected to pump in 17,000 crore rupees through the Power for All Saubhagya scheme.
Housing finance companies like Gruh and Repco lose despite the extension of the interest subsidy on home loans under the Affordable Housing Subvention Scheme till March 2019.
Shoppers Stop surges after Amazon picks up 5% stake in the company. Both companies sign an agreement to open Amazon experience centers across the Shoppers Stop network of 80 stores.
All right, so those are all the top flyers. In terms of stocks which are in focus, Gayatri Projects, in fact, their JV has bagged an order, almost a 1,500 crore rupee order. TV Sandeep Reddy, the MD of Gayatri Projects, now joins in with more details. Hi, Mr. Reddy. Good afternoon to you. To begin with, could you tell us what exactly is this order? What are the kind of margins an order like this enjoys, and what does it take your order book to?
It's basically part of this company, a project called Kaleshwaram Lift Irrigation in Telangana. This is like building part of a reservoir, 50 ton. So our job involves earth dam and doing all that. So the margins are around upwards of between 15 and 20% in these projects.
Well, if it is a JV, what is the listed Gayatri Projects to benefit from it?
Yeah, it's a JV because these are involving certain specialized things. So we would be mostly executing majority. It's still not yet finalized between the JV partner. Our minimum would be around 600 to 800 crores of work in this, where we will be executing ourselves.
Okay. What is, why would you need a JV partner at all for this?
No, because basically some of these jobs involve a certain amount of, reservoir completion and, basically for the PQ requirements, RFQ requirements. So the JVs are formed because of RFQ details. See, for example, they may say that in the past, Gayatri has done a lot of projects, but this particular type of reservoir we have not done. Maybe I have done 6 years back. But the JV condition says that in the last 5 years you should have completed. Because we've been mostly doing last 7-8 years highway projects. Irrigation has been less of a focus actually. So, that way it compels us to form JVs actually. That's the reason.
Okay. So what's your total order book now?
This because our order book will be upwards of nearly 13,000 crores.
13,000 crores. How do you account for this one? Because this goes into the JV, no?
Yeah, it's a JV.
So in your 13,000 crores, this is not included.
Yeah. This is the total. Our share of the work or what execution we are doing would be added to our order book company. So this is too early now to finally complete, decide what is the share of work we will be executing actually.
When will this money come and how much money will come to the listed stock?
There's nothing like money coming in. This is when you do a project, when the project starts, it takes 3 years to complete the project. 30 months contract. So when we start the contract, when we start billing, the billing will start. I think the billing would start maybe after 1 quarter. Normally this involves initial mobilization about 2-3 months, and then we start. This luckily
Margin
is not a design build contract, so that's why we are able to start billing much earlier in these jobs. Only issue is land acquisition, but we understand from the government on this project is a priority for them. So they are more or less completed all the land acquisition and all the other clearances.
Okay, so in a quarter you can start the project.
Yes.
And billing. Okay, what were the margins you said you can make on this?
Yeah, upwards of 15%. Yeah.
All right. Okay, we'll leave it at that. Mr. Sandeep Reddy, thank you very much for joining us with your take on this irrigation project that the company has won along with a joint venture partner, and the joint venture partners are NCC and HES. Well, with that, let's move over to our movers and shakers segment. Our entire research team is with us, but today the market itself is a movers and shakers candidate, and some of them, the marquee NBFC names, for instance, are having a roller coaster ride. Nimesh is here to tell us what exactly is happening. The market itself is a mover and shaker today, Nimesh.
Oh, yes, Lata. So, while we've seen a marginal recovery in the last half an hour, 1 hour of trade, but what is happening is the first 1 hour was clearly, a visibility of margin pressure from NBFCs, and that's why the entire financial space was under pressure. So all the NBFCs like D1 Housing, Reliance Cap, Gruh Finance, housing finance companies, NBFCs, all were under pressure. And remember, that's a space where there is everybody is so leveraged into. Whether it's retail, HNI, even the PMS investors, they all seem to be only chasing the NBFCs and housing finance companies. So clearly, first signs of weakness, and that's where a lot of people have thrown in the towel. So that clearly was a pressure which was clearly visible. At least my understanding is the first hour pain of margin calls is pretty much out of the system, which probably explains a bit of recovery in the mid cap and small cap in the last 1 hour of trade. But the other feedback is, while we all talk about so much of domestic liquidity, today my sense is that's not pretty much visible or present. The domestic are not looking to buy this dip so far. So maybe some bit of mutual fund buying, but even from a DI perspective, my sense is some of the insurance companies are sellers in this market. So you have FIS sellers, you have insurance company sellers, and a bit of marginal buying coming in from DI. So make no mistake, while DIs are sitting on a lot of cash, but this is not the time when they are looking to deploy this cash. So maybe you'll see further pressures, especially in the leverage names, especially in the mid cap and small cap. So that's the clear message coming in from the dealing rooms. But at least the first hour pain of margin pressure seems to be pretty much over in the mid cap and small cap.
Okay, worst is over, but people are still looking for lower levels to buy and not current levels.
Ouch. All right, but the one stock that's defying gravity today is Sharper Stop. In an otherwise weak market, the stock is now up 15%. Mangalam, what are the details?
Absolutely. That's what Amazon purchasing stake does to a stock, perhaps. Because if you take a look at it, Amazon bought 5% stake on Friday for a price of 408 rupees. And since then, the stock has rallied nearly 20% as we speak. But this is a win-win for both Sharper Stop as well as Amazon. Amazon gets to give the Amazon experience to 80 Sharper Stop stores, while Sharper Stop gets a platform, another platform to list 400 of its brands. So that is a positive. Some analysts expect Sharper Stop to get about 200 crores of revenues coming in via this deal, but FY19 they expect the company to post about 100 crores on the top line, which a margin of 6%, which is lower as compared to peers. That's why perhaps the stock was trading at a significant discount to its peers at about 0.6 times EV to sales, as well as 11 times EV to EBITDA. Now the key monitorable going forward will be the margin improvement. At the same time, they have another thing that they can do to improve margins, which is sell Hypercity. Because if you take a look at FY17, margins were 3.5%. Ex Hypercity, those margins go up to 5.1%. So margin improvement again is the key for Sharper Stop. A bigger story though is e-commerce weakening out, because over the weekend we got Aditya Birla Online Fashion also shutting out, and at the same time Kishore Biani decided not to invest in e-commerce going forward. Infibeam too is down in trade today. We spoke to the management of Sharper Stop. This is what they had to say in particular about the margins.
So we are profitable for the full year last year as well, and we will be profitable throughout the balance quarters for sure. and we should definitely see EBITDA change or EBITDA a basis point change between 60 to 100 basis point during the year. Target we have kept for ourselves is hitting 8% EBITDA margin in about 24 months time, and I think they are very sustainable. No deal as of now with any group, and as I mentioned in Hypercity, we have been working on raising funds, and we are, I would say, at the last stage of discussion with multiple partners to really look at fundraising or some other alternative strategic arrangement, and we would be in a position to really announce something new in about 4 weeks' time.
Right, and the Income Tax Department has concluded search operations on the premises linked to former Union Minister S.M. Krishna's businessman's son-in-law, V.G. Siddharth, who's also the founder-owner of Cafe Coffee Day, the country's largest coffee retail chain. Rukmini Rao joins in with the very latest. Rukmini.
In fact, the IT department concluded its searches on various properties of Cafe Coffee Day here in Bengaluru and also estates in Chikmagaluru, which of course V.G. Siddharth, the founder of the company, owns. What we've been given to understand from the Income Tax Department sources is that the officials have been able to unearth documents which go on to prove that there is income beyond 650 crores that was earlier disclosed by the company, and also for a fact that there have been several other documents that have been gathered by the Income Tax Department during the searches which indicate violation of several other statutes, though they did not go on to specify which are those. But however, the department has said that they will be pursuing this case very vigorously, which means that we could expect some kind of summons being issued by the department in the next couple of days, really asking Siddhartha and other management officials to come and explain on all these documents that have been able to come to the limelight through this search operations carried out by the department. Back to you.
All right, thanks a lot for that, and that's taken 10% off that stock, Rukmini. Let's get to the one that's surged today in trade. Capacity Infra had a dream listing with a 50% premium, which got rolled back, but only a bit. Naveen is here to tell us what the company does and why it's going is better than gold, Naveen.
In fact, even after the rollback, the stock is trading at around 21.5, 22 times FY18 PE multiple. Now, if you compare that with its closest peer who are in the same business, remember the sector is into commercial building. They are into construction of commercial buildings, residential areas, as well as institutional buildings. So the peers are Ahluwalia Contracts as well as NCC and GMC. So the main point is they are trading at around 18 times. Why? Because if you compare the ROE, that is the return on equity of Capacity Infra, the company has given a ROE of close to 30% versus its peers like an Ahluwalia is giving 20%, NCC is around 7%. Also coming on to the fundamentals, the financials of the company, it already has an order book of close to 4,600 crore. In FY17, the revenue was 1,100 crore. So on a sales to order book ratio also quite positive. Margins, they have been doing quite healthy, and PAT, they did a PAT of 69 crores, and the analysts believe that going ahead, 25% is the growth that they are expecting on the bottom line. In fact, we also spoke to the management, so let's listen into what the management had to say.
All right.
I think it's completely ridiculous to find a company which is fundamentally so strong and doing extremely well. On the contrary, I think the business prospects of the company has improved significantly after they have integrated themselves with CC Avenue, which is a payment aggregated business. The stock is basically showing a distinct signs of, I think, higher growth as far as I think the business and outcome of the business is concerned. Recently, I think we have had the analysis also by the company, and I think we gathered that I think they have presented company very well. So again, I think the fundamentals are suggesting that the stock is in a strong direction.
Well, the markets have not moved much after the initial volatile movement that we saw in the first 2 hours of trade. There is a little bit of recovery. As you can see, the markets went all the way down to 9840 levels, giving up the 9850 mark. But there has been a reasonable recovery. And as you can see, stocks like Yes Bank are showing a decent amount of recovery. So let's use this quiet space in the market to get to a company. Shashank Sinha, the Managing Director and Group CEO of Strides Shasan, joins us. Let's start by asking you about the Renevla generic. We understand that Strides is supplying the raw material, the API to Cipla on this Renvela generic. Can you tell us what is the status? How much money are you making because of that?
So, you know, on Renvela, we wouldn't comment on the partner because obviously this is going to a third party. You know, the sublimate carbonate approval for the partner is still kind of, you know, in there. You know, they are managing that. So I don't think at this point in time we are in a position to comment on that.
So, Shashank, how much would Strides, for instance, factor in terms of this generic supply, Renvela generic raw material?
You know, as of 1st October, API is going to be a different business. You know, we are in Strides going to keep our captive APIs, and the third-party API supply is all carved out into a different business. I'm not at liberty to talk about their business portfolio. It is a significant product. That's all I'll say based on the development that has happened. And of course, you know, your own analysis will indicate what the potential for the product is. But it's going to be spun off into a separate company which is going to list separately. So it will be unfair for me to comment on their portfolio.
Totally take your point that 1st October on the API business will not be a part of Strides. Could you tell us what the new structure will look like and when that relisting might happen?
We have announced already, as you know, that basically the integrated business, which is Strides Sashun, will essentially form into a vertically integrated formulations business where all the strategic APIs that we use only for captive consumption, we will keep it within the formulations business, which is the continuing Strides business going forward. And the third party, so, you know, essentially our strategy is to be a B2C company. And in the B2C company, we want to keep all the strategic APIs because we are like ranitidine, etc. We are actually developing integrated products within our platform. All the API that we sell to the third party, which is a B2B business, it will be spun off into a separate company. The appointed date for that is 1st October. We are still pending one key approval for that. But that will be spun off as a separate company. It will going to be known as Solara, and it will be listed separately. So that is a scheme of the demerger.
Okay, let's talk about your approvals then. The latest we're told is for Lovaza generic. Could you tell us how much you're likely to make from this drug?
Lovaza, the market is about between $200 and $300 million. You know, it's a dynamic market, so last report, the market is somewhere between 200 and 300 million. We have a unique marketing arrangement for this product. We are taking this product to market with an established player who is one of the market leaders, and therefore we should be starting with a very strong position. Now, it's again difficult to say, but you know, we have indicated that the marketing partner that we have, so the marketing arrangement that we have with that company has close to between 20 and 25% market share, and we will be a significant component of that. So, you know, that's the scale of the opportunity.
Okay, got that. Thank you very much, Shashank Sinha, for joining us with those details. So look forward to October 1st when the demerged, when the raw material manufacturing entities will be taken away from Strides Shasan. Let's get back to a spot news that will just flash on your screen. Even as the Maharashtra Drugs Authority, FDA as we call them, Food and Drug Authority, begins testing of popular water brands, Priya Seth, who broke that story for us, has come back with another story, another development of that story. We understand Gujarat has also called for water samples. Priya?
Well, absolutely. In fact, what we are given to understand from our sources is that the Gujarat Food and Drug Administration has been conducting voluntary tests to check bromate levels in packaged drinking water. So what I am given to understand from my sources is that they have already found several popular packaged drinking water brands to be substandard at this point in time. Now, just to give you a sample size, about 400 to 500 bottled water samples have been tested over the last several months. And out of these, about 40% of the popular packaged drinking water samples levels have been found substandard. Now, at this point in time, we understand that the Gujarat FDA has not sent notices to any brands at this point, but what we are given to understand is that they will be holding a meeting with the representatives of packaged drinking water in Gujarat over the next 10 to 15 days, and they will discuss issues like water treatment, facility upgradation, as well as counterfeits, because this is a very big and very imminent problem as far as Gujarat and other states are concerned. Now, this is a voluntary testing that they've conducted, and we do understand that other states may also follow a voluntary testing as far as the bottled drinking water is concerned. But just to give you a perspective, the permissible limit for bromate in packaged drinking water is about 10 micrograms per litre. So if it exceeds that limit, then the water will be found substandard. So we'll keep you updated as to how this pans out and whether or not other states really adopt voluntary testing of water for bromate levels.
Okay, this is looking a bit scary. Thank you very much, Priya, for joining us. I'm not a bottled water fan, but there are a lot of people who only can resort to bottled water, not the least foreign tourists who would depend on the brand and expect it to be foolproof. So if that's not up to speed, then that's a serious worry, very serious worry. Well, on that note, let's do one thing. We'll take a break. We are coming back with our tech gurus, Ashwini Gujral and Prakash Gaba, to tell us how do you trade this rather volatile market, deep cuts in the first hour, a bit of buying in the second hour, but still the trading day, the Nifty is down 1% and the mid-caps have substantially recovered from the day's low, but still down 1.25%. Ashwini Gujral and Prakash Gaba have joined us to give their midday views. Good afternoon, gentlemen. Ashwini, what have you made generally of the texture of the market? Will it still trend lower?
Absolutely. What is the pullback we are talking about? 20 points after 300 points of decline. So this is going down. There is no question about it. HDFC Bank is right now making lows of the day. So obviously institutions are still selling. And the whole point is there is now nobody left to buy because everybody knows that this sort of momentum will take it lower. So if I have to invest anybody's money or if I have to invest my own money, I think I would much rather invest at 9,500 than right now because I know earnings aren't going to pick up. So it's not like market is going to run away. So this is something, that people need to take on board, that when you have a 2,000 point Nifty rally, if you give back 1/3 or even half, the original trend is not vitiated. So 1/3 is about 93, 9,400, half is about 9,000. So somewhere in that vicinity, that is a fairly normal style correction, although it won't appear normal to people who got in at 10,000. As far as calls right now are concerned, Capital First is a sell with a stop of 752, target of 730. JSW Steel is a sell with a stop of 236, target of 222. And Motherson is a buy with a stop of 334, target of 352.
Okay. Well, Ashwini, what will falsify this proposition that you just said? If the index goes to 10,000, you would rethink, or even if it went to 99, you would rethink?
See, basically 99.50 is now your trailing stop. We shouldn't cross and close above 99.50. And I don't think there is a risk of that because as you can see, the market is eager to expand on the downside. The texture has changed. Last 2-3 weeks, we were kind of sideways between say 99.50, then 10,050, then we shifted the range upwards. That was contraction. This is clear expansion and with force. So even a 100-point trailing stop will work in this situation.
Fair enough. Prakash, what are you trading?
Well, the market to me is still weak. No sign of strength as yet. Rallies are shorting opportunities for next couple of days. I have two shorting ideas here. I would like to short Diwan Housing Finance Limited. That looks weak to me, and it can see a slide to levels closer to 500. We get rallies here, shorted, have a stop about 560. Maybe take a day or two, should go there. Second is HDFC Bank. That looks certainly weak. The way it's trading looks like HDFC Bank can slide down to levels close to 1780, 1760 zones. It's already fallen after I've recommended, but looks like it's weak. Rallies can be short, stop about 1820. That's steep, but the targets are also deeper, 1760.
All right, gentlemen, thanks very much for your trading calls. Let's also take a check on the European market opening. I think it's mildly lower, if I'm not mistaken. Yeah, so flat to lower. The FTSE is the one which is leading the losses, down about 0.5%. Remember, markets are digesting the German election results. Angela Merkel has won a 4th term in office, but political negotiations to form a coalition are what investors are now focusing on, and that's expected to be a tad bit on the rougher side. Brexit negotiations will resume today as well in Brussels, and also some news flow coming through from CNBC, where we understand that Japanese Prime Minister Shinzo Abe has announced snap elections for next month.